Now let's learn about what are the role of bankers. Means the people who are working in bank, what exactly they do for people, what exactly they do for the public. So let's start with the first role, that is mobilizing the savings. So in the olden days, what used to happen? People have the money, they used to keep it in the locker, they used to dig the hole in big trunks, they used to keep the money and shove it under their farms and all. And years later, they will dig it out and get the money. So now, if we keep the money like that way, it's not growing. Whatever money you have kept is going to be like that. You can keep it for years, right? So, what banks did, they told people that whatever money you have, you can deposit it with us and we are going to give you more money in return. So, it fascinated people that whatever money they have, it's going to be safe and plus it's going to give them more money whenever they need it. So now what banks are doing, these savings which people are keeping with themselves, they are taking it and they are also not keeping it with themselves, they are mobilizing it. Means they are using it for different purposes. They are giving loans to government projects, they are giving it to industries to grow, they are giving it to people for their personal needs. So, mobilizing or making sure the funds are flowing, it's not being constant at a place. So, banks, the first role or first function of bankers is to mobilizing the savings instead of keeping it at one place. Next, providing credit. We just discussed. So, they mobilize the savings. How they mobilize? By providing the credit. Credit in terms of loans, in terms of advances. So, whatever money being collected from the public or from the depositors is being utilized by giving loans and advances to the people in need. So, these people can be general public, it can be industries, it can be government, it can be the private sector, agriculture. There are so many areas where people are in need of money. Okay. So they take loans, they take advances from the banks and in return they give more interest. So their purpose also is fulfilled. They needed money for business expansion. They needed funds for making a road, building hospitals or buying a house or whatever their need is. So they are getting money in return. They are giving some interest to the banks. So the bankers, they are facilitating what? They are facilitating the mobilization of savings as well as they are providing the credit. Next, they facilitate payments. What they do? Whenever the public, the customers who have deposited the money in the bank and they demand for it, bank is readily available to give the money back to them. So nowadays what happens that whenever we need funds, we go to ATM and get the cash. Now even ATMs are for the olden days. Nowadays we have UPI, right? We have more new variant of payments. I mean, in China, there is a technology where by scanning your palm, you can do the payments. So, with the facilitating payment system, now banks have grown so much that any time, any moment you are in need of fund, they are ready to give it to you. So, with UPI, what we do when we are scanning the QR code and making the payment, we are paying through our bank account. Means bank is readily available to give the funds whenever is in need. You are doing UPI for 10 rupees or 10,000, it's up to you. So bank has maintained the liquidity to facilitate the payments whenever you demand for it. So these are the three basic function of any bank: mobilizing savings, providing credit and facilitating payments. Bankers are there to give you these three facilities as a primary service. Next, risk management and advisory. Banks helps you manage the risk as well as they act as a advisory for you. There are so many banking facilities available that whenever you are at risk and you want to don't put your funds at one place, you want to multiply your money, so they advise you, they also help you manage your risk. Okay, so they help you that you can diversify your risk by putting your funds in multiple securities instead of putting in one security, as well as they also advise you that which is profitable, which is not profitable. So bankers has this function of guiding the people in risk management and advisory function, because what's the primary goal? To protect the depositors interest. So whatever money you're keeping in bank, it should be safe. That is why they will advise you and they will help you in managing your risk, so you can trust banks over the money which you are keeping with them. Then it promotes financial inclusion. So bankers one role is to make sure there is proper financial inclusion. We learned what is financial inclusion, making sure that each and every individual of this country is benefiting out of the banking facility. If they are not getting the banking facility, then it's not financial inclusion. Inclusion means including everyone, whether the person is in rural area, whether the person is in urban area, or whether a person is living remote, anywhere, any person, elderly person, young person, any kind of male, female, okay? So each and every person who is resident of this country should avail the banking facility. This is what who makes sure, the bankers make sure the financial inclusion happens. So whatever banking facility the bankers are giving in the urban area, they have to provide the similar facilities in the rural areas as well. They cannot deny that these facilities are not available for a certain set of people. Of course, they have the guidelines for the loans and advances, or they have a proper criteria of how to avail it, but they cannot deny the facility to any person. Then economic development. One of the major role of bankers is to facilitate economic development. How they can facilitate economic development? By providing the funds, by providing the money collected from depositors for infrastructure development, for generating more revenue from the businesses, by providing loans for the business growth. They have to provide funds. This is the basic thing which they can do to facilitate the development. Wherever there is a need of funds, they should be available to provide the funds for that particular development. If they are not available, of course, without money, none of the function can happen in the whole world, let it be India. So economic development highly depends on money, and bankers make sure that the funds which are available with the bank are readily available for what? For economic development of the country. Then custodian of public wealth. They act as the bankers, they act as the custodian of public wealth. People who have kept the money, they are custodian of it, means they have the role of, or they have the obligation to protect the money from any kind of fraud, any kind of theft, or any kind of damage. So whatever wealth which they have collected from the public, they have the obligation to take care of it. They are responsible for safeguarding it from any kind of frauds or misleading activities. So they take care of the public wealth. Then driving digital transformation. So day by day we know and we have seen that how technology has interfered in everything and how the things are evolving over the period of time. So banking sector is not left out of it. Banking sector also keeps on taking technology into hand to facilitate better facilities to the people. If you recall that when was the last time you actually went to bank to withdraw cash or to deposit money or to seek for loan or to have an account for FD, RD. Now everything is available over your phone. Few clicks and you can have your FD account open. Few clicks you can withdraw the money directly to your account, or you can, if you need cash or you want to deposit cash, you can go to ATMs, right? So they have invested so much in the technology that now few the things have become very easy and user friendly for the people who want to avail the banking facility. So this digital transformation of banks have led to simplifying a lot of banking activities. Now earlier when these digital transformations were not there, people used to crowd in banks. There used to be huge line to get a simple, even get your passbook printed. Now we don't know who does the passbook printing, because we can get the statement just sitting at a luxury of our home, few clicks through online banking, and we can get the transaction history. Even we can get that what we have done the whole year, the transactions which we have done. So all these facilities are now at our fingertips. It is all of these are possible because of the digital transformation. So bankers have the role to facilitate, to give you this benefit of having digitalization of the banking facility. Then regulatory compliances. Apart from taking care of the customers, they also have the obligation to maintain the compliances, to take care of or to follow the regulations given by the Banking Regulation Act 1949. So while they are taking care of the public, they cannot focus out that, okay, we'll benefit the people more, and not seeing that what the regulation is telling. So being on the line, being on the path of following the regulation, still providing the benefit to customers. This is the role of banker. So they regulate the compliances, they follow all the guidelines, and make sure they are not going out of the way where RBI have to get engaged with the business as well as supervise it and then fine them with penalties. Then last one, crisis management. Whenever the country is in need, whenever there is some kind of crisis like natural calamities are there, or there is disasters or economic downfall, recession, then banks are the one to help the country in developing the, again, I mean, growing back or coming back to the real position how it was before the crisis. So in the time of crisis, banks provide with the monetary help to the country. Okay, so these are the role of the bankers. The bankers who are sitting in the banks, they provide, they do these functions sitting at the bank for the public and for the country. Now let's move to the last topic, that is role of banks in economic development. We have seen that what kind of role banks or bankers do for general people. Now let's see what type of facilities or what type of functions, roles these banks do for the development of our country or development of our economic environment. So the first is mobilizing savings and credits. All the savings from the public, giving it as a loan or a credit to the development of businesses, development of country's infrastructure. Okay, so what happens now with the funds? The businesses which are growing, they will have more production to fulfill the needs of our country people, as well as they are also, when the businesses are growing, they also generate more employment. Okay, so the role of banks in economic development is to first mobilizing the savings into more productive areas where the country is going to gain more, okay, into more productive areas. Then second one, promoting industrial growth, making sure the industries in our country are growing more and more. Let's say there is a ABC company who wants to have another branch of their company in some other city. So banks will be available to give them fund for this growth. Now having another branch in another city will make sure more employment at that place, as well as more production of goods at that place, more resources. So it's going to help the country if they provide the funds. So they promote industrial growth. If more industries are growing, that means more development is going to happen in the country, because we will be less reliant on other countries for our needs. If we have more industrial growth, that means we are producing more goods in our country and will import less and export more, which is going to help the country in long run. Then agricultural development. Agricultural development, of course, our agriculture is one of the base for our country. So many people, we have the highest population in the whole world. So meeting everyone's basic need depends on agriculture. So these farmers, if they have to meet these needs of people, they need more money. These money or these support are given by the banks. Banks provide them loans, and there are so many loans where they have to pay a very low interest, and in many policies of the government where they might not have to give any interest and still avail a loan. Why they provide loans at low interest or no interest? Because they want the agriculture to grow. The more agriculture is going to grow, the more needs of our country are going to meet. Our food, crops, clothing, everything depends on agriculture. Then next, infrastructure development. We need roads, we need hospitals, we need schools, colleges, we need electricity. All this infrastructural development happens because of the funds which we keep in bank. And these banks, they put their money in these to develop the infrastructure of a particular country. Metro, highways, all are due to the funds which we have provided to bank. So the economic development, that is infrastructural development of a country, it happens because banks are facilitating it. So it's one of the role of banks to contribute towards the infrastructure development. Ultimately, we are going to use it. Then supporting international trade. Banks helps in international trade. For international trade, line of credit, letter of credit, or there are so many other tools which are being used by these industry who do import and export. So these banks, they provide the banking facilities to these industries so that there can be more import and export between the countries, and the needs of the particular country can be fulfilled. International trade provides benefit to any country in so many ways. So what happens that when we are putting money to facilitate better international trade, then our country develops more. Next, promoting financial inclusion. We discussed it just now, that financial inclusion, because a country cannot develop just by developing a set of people. It can develop only when everyone in this country is developing. So financial inclusion makes sure that every person in this country is developing, so they provide funds for the same. So banks make sure that the banking facilities are available everywhere. So for economic development, all the people, they should develop. So everyone should get the banking facility. Then tool for government policy. It is the tool based on which government make the policies. As we discussed, monetary policy, fiscal policy, all these policies in this country depends on whether banks are ready for the development purposes or not. If banks are not ready with the funds, then development cannot happen. So all these policies, fiscal policy, monetary policy, or any kind of policy to name, all are dependent on whether we have funds or not. And these funds are facilitated by the banks. So banks have the function of providing the government policy, the base, the confidence that we have funds, we can go ahead with the development plan. Then employment and entrepreneurship. Okay, it's directly linked with the industrial growth. The more industries are growing, the more employment will generate. The more employment is generating, the problem of unemployment is going to come out. So the employment can be cured if banks are providing loans, banks are providing money to this industry to grow. The more industries are going to grow, the more employment is going to be generated, and the problem of our economy, having unemployed people, can be solved. And entrepreneurship, not only big industries, there are so many small and medium sector businesses which have to be looked after. So these entrepreneurs who are starting small businesses, medium scale businesses, they have to be looked after. That okay, these entrepreneurs, they need some support, not only banking but advisory support also, because what they do, they need this advisory so that they can run a successful business, and from small and medium sized business they can grow into large scale industry. So the banks, they help in employment and entrepreneurship. Then facilitating digital economy. Digital transformation, we discussed about how technology has transformed the banking surrounding around us. So this banking facility, including the technology, has evolved the whole banking sector. Now, if we have a bank in India and we are traveling some other country, we don't need to worry about the funds, because banking facilities are now transformed involving the technology into it. And the last one, development of capital market. Development of capital market means the capital market where all the trading happens, it is facilitated by the banks. Banks have all the subsidiaries which deals in development of capital market. So these capital markets help the country to grow directly and indirectly because it also facilitates the flow of funds, and banks are a very integral part of it. So these are the roles or functions of banks towards the development of a country economically.